Welcome to This Explainer. Right now, as we speak, billions of dollars are zipping across the internet, and the invisible engine powering a massive chunk of that capital flow is Stripe. Today, we're completely bypassing the basic jargon to break down exactly how Stripe's mechanics work, its highly lucrative business model, and ultimately whether its powerful infrastructure is the right payment engine to fuel your own business.
All right, here's our roadmap for today. We're going to quickly cover 1. The mission to simplify payments. 2. How a transaction actually works behind the scenes. 3. The Stripe business model. 4. The real pros and cons. And 5. Is Stripe right for you? Let's dive right in.
Starting with Section 1, the mission to simplify payments. Picture this, it's 2010. Brothers Patrick and John Collison were just incredibly frustrated by what an absolute nightmare legacy banking was. Trying to accept money online back then was bogged down by outdated, super rigid systems. They didn't want to just build another clunky payment gateway. They wanted to build a flexible, truly developer-friendly platform. Fast forward to today, and that developer-first approach was a massive, massive success. Stripe is now the invisible backbone powering enormous tech giants like Shopify and Lyft.
So how exactly did they achieve that unprecedented flexibility? Well, their secret weapon is their API, or Application Programming Interface. Basically, instead of forcing businesses to redirect customers to some generic third-party checkout page, which, totally kills conversion rates, Stripe literally handed developers the exact digital building blocks they needed. It allowed them to embed a completely custom, fully branded payment experience directly into their own apps. It gave developers absolute control over the whole shebang.
Moving right along to Section 2, how a transaction actually works.
This is where it gets really cool, because this entire seamless workflow happens in a matter of milliseconds. You, the customer, enter your details, bam. Stripe instantly intercepts and deeply encrypts that sensitive data, acting like a highly secure bridge to route it straight to banking networks like Visa or MasterCard for approval. Once you get the green light, those funds smoothly land right into the business bank account. It's an incredibly secure flow of capital, and it's all completely invisible to the buyer.
But Stripe quickly evolved way past just basic credit card processing. It's essentially an entire financial ecosystem now. We're talking recurring billing for subscriptions, physical and virtual card issuing, fraud prevention, and even business loans. A really huge standout here is Stripe Connect, which totally solves the massive headache of splitting payments between multiple parties in complex online marketplaces. Honestly, it's a brilliant ecosystem lock-in strategy. Once a business plugs into this massive suite of tools, it becomes really, really hard to leave.
All right, Section 3, the Stripe business model.
So how do they actually make their money? Well, Stripe's primary revenue stream relies on radical transparency. For a standard online transaction, they take a very predictable, flat fee of 2.9% plus 30 cents. Now, while transparent pricing feels pretty common today, back then this was incredibly disruptive. Early startups were so used to legacy banks hiding behind confusing, tiered pricing structures and totally unpredictable setup fees.
And to actually sustain that flat rate model, Stripe relies on sheer, massive global volume. Get this. They currently support over 135 different currencies across more than 40 countries. For a business owner, this means taking your company global is practically an afterthought. Stripe is behind the scenes doing all the complex math and currency conversions instantly, allowing you to accept international payments effortlessly.
Now let's look at Section 4, the pros and cons.
Because no platform is perfect, right? The trade-offs here are pretty clear. On the pro side, that developer-driven customization and incredible global reach are virtually unmatched in the industry. But that power absolutely comes with a steep learning curve. It can be overly complex to navigate if you don't have a technical team on hand. Plus, high-volume businesses might find those flat fees starting to really eat into margins compared to processors that offer lower rates at scale. Oh, and their automated customer support can be notoriously slow during an urgent crisis.
There's also a major operational risk we absolutely have to ground ourselves on. Because Stripe makes it so incredibly easy to open an account, their automated fraud and compliance monitors are exceptionally strict. If you're operating in a high-risk industry, like travel or event ticketing, or if you just get a sudden spike in chargebacks, Stripe might instantly trigger an account hold or completely freeze your funds. So, proactive dispute monitoring, it isn't just a nice-to-have, it's absolutely vital for your business's survival.
Which brings us to our final part, Section 5. Is Stripe right for you?
Let's put it all together. Ultimately, if you're a tech-savvy e-commerce store, a complex marketplace, or an international subscription service, you are going to absolutely thrive on Stripe's infrastructure.
However, if you're a non-technical user who just needs out-of-the-box simplicity, or if you're operating in a high-risk sector or processing massive enterprise volumes where every tiny fraction of a percent matters, well, you might want to look elsewhere.
Thank you so much for joining this explainer. Now that you've really seen under the hood, I'll leave you with this final, crucial question. Does your business just need a simple plug-and-play checkout? Or are you truly ready to build a fully customized payment engine to scale globally? Think about it. Keep learning, keep building, and we'll see you in the next explainer.